Hello, 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 hello. What's going on, everybody? Welcome now, Stock Trades. How is everybody doing? All right, ladies and gentlemen, we're going to go ahead and do a couple things in this video and just do some research here. We are starting. Um, there is no way they dumped it. I thought it had momentum. Yeah. So yeah, we're going to go ahead and talk some stuff. Okay. It's interesting. So in this video, what we're going to do is we're going to be showing the wheel strategy on what the options for Clover are paying, as well as the options for Oscar, just so people can see, what would happen to the option premium when we get to, a price like this, right? And so that's going to be the purpose of this, just to show, how much money you can make on just a $1 million portfolio. And this is going to show you, and you could go ahead and do your own percentages and calculate, how that would be done, right? And then so this will be very educational. Also, our RIP Ozzy, definitely. Yeah, that was sad, man. That one got me. Let's especially that last song he sung. Yeah. So yeah, it's very sad, guys. So life is short. Right now, Opendoor Technologies is down in the overnight market 4.1%. So it's down 4%. A Clover Health in the overnight market is up 4%. It's almost like money's being transferred from here to there. Here's Clover year to date. Now it's finally positive. It was actually negative for quite some time. It was following healthcare. And then all of a sudden now it's trending back up. So I think we may be getting into a reversal pattern. On a year, we're up 93.98% max. We're still down. But if you go all the way from around 60 whatever cents, we're up over 380%. So we're going to be talking about this. But definitely for Open, you could see that there was a just huge momentum here, around 800% move. And unfortunately, a lot of people, and this is the sad part, a lot of people on Twitter now are like just talking about it like it's past tense, like that was an epic squeeze. This will be in the textbook, So let me explain to you. Open textbook squeeze. And a lot of these folks that we're talking about, sadly, I missed the, I wasn't able to bookmark the tweet, but there was a guy that was literally saying Opendoor to the moon, open. And now he's basically saying, well, it's supposed to fall. That's how they do. They pump and dump. He's like, yeah, that was good. To get in early while it lasted. Glad, I took the opportunity to, essentially making money off of it. And it's a shame because, like I told you guys, I was very critical of this. I said, this isn't going to be a pump and dump, right? Potentially there might be some intrinsic value to it, but still, that's if they do a turnaround, which I'm not seeing from the financial sheets, right? Maybe in a couple quarters from now. But it's unfortunate because I went ahead and I gave this response to this gentleman here. It's unfortunate. He had only 12 views. He had only 12 views. So I retweeted him, and the poor guy got like 4,600 views. He's probably, I feel so bad for the gentleman. Let this sink in. If you ask me, I say Open bullish. So it's 3 hours and he still think Open is bullish, right? He is still bullish. He's still saying $40, right? And this is what it looks like, now, right? So this is what it looks like now. It's pretty much, falling 44%. Now again, there could be some juice in the tank, but just this is what he said. Are you ready? I'm going to highlight it here. He said Albert Allen is completely off base here. His track record speaks volumes. Yeah, my track record. Yeah, I'm a multimillionaire. Yeah, my track record's pretty good. With his flagship pick, Clove, which is doing actually really well because it's profitable. He says, which has been languishing in the $2 to $3 range for what feels like an eternity. I don't know about you, But if you look at Clover, literally 15 months ago, it was under $1, and it's only been up above $2 for only not even a year. It hasn't even been a year. It's been above $2 for less than a year, right? So then he goes ahead and pretty much said, it feels like eternity. Again, very emotional. But what strikes me, and this is the people that I'm actually trying to help. He said that that's not why I'm confident. So he explains his just analysis, right? And he's attacking Clover as it's like a sports team. It's like, think of like Clover as the LA Lakers, and then Opendoor as like, I don't know, let's call them Phoenix Suns. He's treating them like Lakers versus Phoenix Suns. And then he says, after all my bullshit analysis, I'm confidently going all in with my entire net worth. And I put a laughing face here. He put his entire net worth in Opendoor. He literally put his entire net worth in Opendoor. And I'm just kind of going through all the comments here. Am I a bad investor for taking 20? Okay. Taking, I don't know. Right. I still think open long-term has a future. Yeah. Well, yeah, exactly. They just have to improve the fundamentals. Al, don't worry, my friend. Haters are your biggest fan. I know a big dog like you feeds off the energy. Oh, 100%. But you know what? The thing is, I use whatever their mind can generate, which is technically dumb money. And I literally say a textbook example of dumb money to teach, because this guy literally put his whole net worth into this, right? Like, how risky is that? Very crazy, man, to do that without understanding the fundamentals. But the point is imagine the people that bought, and trust me, there were people that bought at $4.97. People bought at $4.97. And now they're just waiting. They're pretty much waiting. Right? So we talked about this, guys. We've done the due diligence. A lot of folks were angry at me because, again, they just couldn't understand the logic. And this is the issue now with Opendoor. So as you can see, I did 2 intrinsic value calculations for Opendoor, assuming they have a turnaround with positive free cash flow, but they haven't shown that. But I said, let's just say maybe. And you could see I got a range of anywhere between $2.81 to $15. Now, again, it's kind of interesting. $2.81, that's kind of what it's fighting right now. It's fighting against that 281, which is that bottom end of the intrinsic value. But granted, right now, overnight, it's down 4%. So, and then Clove is up 4%. So, with this intrinsic value that we did, this could carry some weight. But here's the problem. So we went ahead and talked about a potential short squeeze for Opendoor, right? We saw that the shorts have increased. Just literally 7 days ago, the shorts were 19.79%. They literally almost increased by 10%. Sorry, they increased their short by 10%, which is a 43.3% increase. You have a 342% increase in short interest. Days to cover, they're getting smarter, so now they can exit it really quickly. How are they doing that? How are they able to exit it quickly, right? The short score is up, but let me explain to you why all this is bullshit. This is all bullshit. Let me explain to you why it's all trash. If you go to Open right now, and if you go to institutional ownership, and if you go into the investor holdings here, or better yet, let's just go take a screenshot here so we can zoom in. Here's again, this is all proprietary with our data. You get access to what the big dogs are doing. And if you guys want access to this software, use coupon code SAS before it expires, right? And you're going to be surrounded by people that are successful, and ultimately a group that's going to basically change you from zero to hero. So with this, guys, with the ownership percent, do you have $500 you can... Oh, man, you're going to make me pass out. Okay. So, all right. Now, ownership percent. If you look at the ownership percent, look, it's like still around 45%, right? So there's still a lot of owners. The institutions still, obviously, they're selling it by the doves, right? But they still own some, right? They still own some. So what does that mean? Well, let me explain to you. Yes, it's true that Opendoor is a squeeze candidate. And yes, they've increased their shorts and they're making money right now. Even if you have buying pressure, you still have a hard time getting a squeeze. Why? Because institutions own a lot of shares. So what they're going to do is they're just going to sell those shares to the open market to allow shorts to cover. You see how they do that, guys? It's disgusting, right? So if you go to open, and this is why you got you see that huge negative candle? That candle was 351 million volume of just straight selling. Now, if you go to the minute candle and go all the way back here, you see this candle right here? That was 26 million volume of shares traded in 1 minute. That right there, guys, who do you think that was? Who do you think that was? Right? That was institutions. So we went ahead and we did this mathematical model and we showed you this. Now, again, I'm not going to show you the paper for Clover because, again, I might show you one. You know what? How about this? I'm going to show you one. Okay, so you understand from an educational perspective. But every 3 months, I'm going to be updating this. A lot of people were saying this is all data. No, it's not, guys. This is new data. And people were trying to again, dumb money, right? Here is let me show you Clovers now. Okay, so let me show you this, and let me show you opens. So let's just look at the data. So here's opens, and here's all the mathematical modeling for what we did for Opendoor. And what you can see is whatever you see here is a conservative analysis. So when I tell you they are heavy sellers in the $2 to $4 range, $8 to $10, $12 to $14, $18 to $20, that's showing me that their average cost basis is $12 to $14 and $18 to $20, and they've been selling in the past 3 months at lower prices. So that tells me is they want to get out. So whenever you get an extreme rally like that, going 800%, that's not sustainable. So you do this predictive modeling and you can see that you had a lot of buyers here, but then after $5, even near $5, you see the buyers start to get dispersed. But all of a sudden, the sellers start to aggregate here. You start getting a lot of sellers, and the level of red is even darker here on my screen. You got to look at it. There's it's not as red here, but then it gets dense here, right? So, so there's that, right? And then you can look at other things too, right? So what I'm going to show you now, and this is using 591 institutional transactions from big dogs for Opendoor. And this is the most recent. And every 3 months, I'm going to update this. Why? In Clover's case, institutions are buying Clover. So as soon as institutions start selling Clover, our analysis is going to figure out exactly when they're selling. And we're going to do a statistical mainframe analysis in conjunction with the intrinsic value. And we're going to know exactly when we should sell our covered calls and cash secured puts. So let me show you. And I'm only going to show you guys this one time. I'm only going to show this document. I'm not going to show you the other documents the next 3 months and the next 3 months and the next 3 months. Why? Because again, this is the edge that I have. And this is the edge that lifetime access members have. Again, you can get this edge if you want, right? But we have a high price target of entrance of barrier to, essentially be able, again, it's an edge, right? So we went ahead and analyzed 337 institutional transactions for Clover. And this is the equations we did, the accumulation pressure index. So if you're thinking of buying Clover at 4, and this equation shows 60-70% of institutions are buying at that level. You're essentially joining smart money in accumulation strategy. It's like buying a house when 7 out of 10 wealthy people are buying. So we could go ahead and read up on all these numbers here, but I'm going to just show you here. So this is the institutional accumulation analysis. So you can see this is so $1 to $2, about 71% of institutions are accumulating. $2 to $3, 66% of the people are accumulating. Remember, for Opendoor, they were selling. For Clover, they're buying. So around $3 to $4, they were buying 100% of the time. 4 to 5, 60%. 5 to 6, 50%. 6 to 8, 8 to 10, that's when you start getting into 100% of them bought at that range, right? So now we do an analysis and we make sure it's statistically significant, and we see that it's a strong buy in the $3 to $4 range. In the $6 to $8 range, it's a strong buy. In the $8 to $10 range, it is a strong buy. 12 to 15, this is for Clover. 12 to 15 is a strong buy. 10 to 12, again, the data, obviously, you're like, why is this a strong buy? This is not, again, data's messy, right? But you can see it starts becoming selective. So as of right now, you have 43% of people buying, 17 holding, and only 39 selling, right? And it's interesting. The ones that are selling are smaller accounts. So at 350, this formula predicts massive institutional buying, right? So 350, you're going to get a lot of institutions are buying. And when did Clover put in $18.2 million? $3.60. You can look at their filing. You're going to love this. Okay, so this is the liquidity support ratio, okay? And what this equation tells you is how many days of institutional buying power are available to support a stock. And watch this. So actually, you know what? I'm going to skip this, and I'm going to look at, just wait. I want to show you something even better, actually, okay? Given the limited time we have. So cumulative institution, this is for Clover, accumulation for institutions. You can see these folks are buying up a lot. Bank of America stepping back in. And you can see basically, at what their cost basis is at. Obviously, these two things, there's a special calculation for them. It's beyond the scope of trying to explain it in this video. But the big thing here is I want to show you. There it is. I want to show you the retail investor equation that we have, and explain to you and compare it to Opendoor's. Okay, and you're going to find this very good. Okay, so let me go down to Opendoor. Okay. Okay. So here's the same equation for Open. Okay. So this is what it says for Clover. If you buy Clover at $3.50, you should expect a 28% gain. If you buy Clover at $4.50, you should expect a 23% gain. If you buy at $5.50, you should expect a 17% gain. Now watch for Opendoor. If you buy at 10, expect a 34% loss. Buy at 14, a 51% loss. Buy at 18, a 40% loss. Now, of course, you can go in and calculate it for $4 and $3, but on average, you can see the losses is anywhere between 30 to 40%. Now, if you go to Opendoor and go all the way up here and go all the way down, what is the loss? 45%. You see that? Right? So we're giving away the secret sauce, but this is it's important to show folks what's out there. Okay? And the fact that they could get access to this research. Now, here's the thing. I'm not going to be showing you the next editions of institutional research for Clover in the next quarters. This is the only document that people can see. Why? Well, first off, it's not fair to the paying members that actually paid to join lifetime access. Number two, I use this to make money, right? I use this to make my money. how do I use this to make my money? Well, as Clover in this portfolio ends up becoming a 5, 10, 15, $20 million portfolio, what's going to end up happening is I'm going to want to start doing covered calls and cash secured puts. I need to know at what levels institutions are selling. And unfortunately, retail investors are sadly, like this individual here. Where the hell is he? Individuals like this guy are going to be buying those retail share, essentially those institutional shares, right? And they're going to be gambling. The problem is I don't want this to circulate because it's again, I speculate that once Clover reaches its intrinsic value, we're the only people talking about Clover to a point where if you Google Clove, you find me, right? So given this, and given that I went from homelessness to becoming a multimillionaire, and I built a $50 million platform, and I was 40 under 40 most influential in the state of Arizona, yada, 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 and you're seeing $1 million portfolio compound over time, there's going to be a lot of people that are going to want access to this data, and it might actually hinder my edge. I might actually lose a couple $1 million by just putting this freely. So to restrict that, I'm willing to be able to offer this for my lifetime access members, because in exchange, my lifetime access members get educated through our platform because we're an educational platform. They get access to all this data, and ultimately they're going to end up helping me, because a lot of them are going to end up retiring. They're going to end up helping me find the next 10 baggers out there and pretty much be able to do due diligence right across the beach and enjoy their life, sipping Mai Tais and essentially doing intrinsic value calculations and finding undervalued securities, right? And we could do this as an educational platform and as like friends coming together. So this is why, I'm just letting you know, this is the type of research that's out there. And you're not going to find this at Seeking Alpha. You're not going to find, you're not going to find this. You might find it in JP Morgan Chase if you have over $100 million, right? You're not going to find it anywhere else. Okay. It's just the name of the game. This is high level research that is unfortunately inaccessible for retail investors. And the beautiful part about this document is you can it's interactive. It's a very professional document, right? And again, and we're going to be doing price increases soon for our platform. So, definitely take advantage, because unfortunately you will be priced out. Why? Because by the time we've proven ourselves and, the portfolio ends up reaching $30-40 million, and then our platform has a total combined net worth of near $1 billion, we don't want your typical pump and dumper in our platform. So that the prices are going to be very difficult for entry, which is unfortunate, but it's okay, because there's 800 videos on YouTube that will help people, teach them that maybe they can follow what I'm doing and be able to make it on their own. It'll take them 5 to 10 years, but hey, there was the opportunity to join when it was cheap, right? So, and club to retirement, lifetime access members. Again, you guys see the data, right? Brandon here saying, so realistically, no chance for a squeeze. So it's tough, okay, because you have short interest. Where the hell is it? You have short interest high, and you have a lot of volume. Just look at today's volume. Look at today's volume. You had 1 billion shares traded. And my fear is that institutions could just dump the shares they have to cover. So it's tough. And here's the caveat. And this is where it gets dangerous. Like I said, if you follow our research regarding our hedge fund level style research, where you look at the accumulation and for Clover and selling for Opendoor. If I was hedge funds, what I would do is I would artificially inflate the stock price of Open so I can sell. So okay, watch. I artificially inflate the price, and then I short it heavily. I cause a short squeeze. I don't cover my short. I let it ride. And then as soon as it goes up to $8, $10, $12, it's already proven itself that it has the volume and it has people's attention. As soon as it goes up to that level, I will basically sell and offload all my shares, create a large selling pressure candle like what you saw here, 26 million shares in just 1 minute. It'll probably be 100 million shares in 1 minute or 200 million, right? And then it'll cause immense downward pressure. And then I would, because I shorted it, I would make money on the downward spiral. Like essentially what they're doing now. They're making money by doing that. So that again, and retail investors, they're like mice. You put cheese on a trap, they're going to go eat the cheese. And some of them know there's a trap and they'll still eat it because they don't have anywhere else to go. And they need money, and they become desperate. And they're willing to put themselves through financial ruin just at the shot of the cheese. And they're willing to play hot potato with it, hoping that it won't close on them. It's poetic, right? So, all right. So there's that. Okay. So we talked about this. We talked about institutions. We talked about the intrinsic value. Healthcare, again, the last time healthcare was this low, it was 2020. After a year, it went up. Again, pretty good things we can say in regards to healthcare. I think it is going to, by 2027, I think it's going to rise. And I think the market's prognostic for that. Now, what I want to focus on is I want to focus on kind of like Twitter. Okay. So for folks out there, if you guys want, follow me here. I post my research here so people can see what I've seen with a lot of accounts. What's his name? I can't find it. There's a lot of accounts on there's a lot of accounts, guys, on Twitter X that all they do is they find the most highest stock that's performing and tweet about it, and then they get engagement. And unfortunately, they were doing that for Opendoor, and they were saying it's going to go to the moon, it's going to go, baby. And what we were saying is quite the obvious. We were, it was the obvious, but it was quite the opposite. It's impressive that our post got 113,000 views, but what we did is we were critics, and we were saying that be careful, be careful, be careful. And we went ahead and posted this, and I said something doesn't add up. And it's unfortunate because, if someone says this thing's going to go to 80 or 40, then why were they selling? Why were they selling at, what do we say here in the data? Why did they sell at $14.61? Why do they sell at $5.66? Why do they sell at $1? Again, in 16 cents. Well, why? It doesn't make sense. And unfortunately, a lot of folks were saying, don't bash the stock, just enjoy the ride. Again, we exchanged a few words, but a lot of people don't understand the fundamentals, and we hash things through. Then you had blocking of tweets and all those crazy things, and people calling me shorty, and then I'm like, no, I don't have a short position. You can see the portfolio here. Where is sorry, I lost the tweet here. Too many tabs open. Well, it's all gone. Maybe it's here. Yeah, here. Okay. Yeah. Then it says us traders only care if it goes up and down. I don't really care about it historic, but and that's the problem. You got day traders come online. That's why I agreed with him. I mean, I'm not going to argue with him. He's right. I even like this comment. And you have people here that say about AMC, they're like, it doesn't matter where it is now. It skyrocketed and many of us made money. So you can ultimately see that it's, these people that are pumping these stocks, they want to get more suckers in so they can ultimately end up selling you their bags. So not only do you have institutions selling to you and giving you their bags, you have your fellow retail investors that can that can potentially F you over. Right? And again, this is why it's important to have again, the platform we built with all of our members, to have a place where it's data driven. Okay. So let's go ahead. And like I said yesterday, if you haven't checked the video, algo flow, interesting. We saw it was going up for Clover. But yesterday we did the algo flow for Opendoor and it was actually going down. So that's why, if you just watched my video yesterday, if you guys don't believe me. But yeah, so here it is. Let's see. Algo flow for Open now. So I see it going down, and then now you're seeing it rise. So we could potentially get a rebound again. Does it have the opportunity to rebound? Yes. Now, I think institutions, it's in their best favor to rebound it so they can sell. Because again, they want to offload their bags. So there's that. Now let me see here. Hold on. All right, good. There's that. What else I want to make sure I talk about? Yeah, so we pretty much talked about a lot of this. Now what I'm going to do next is I'm going to go ahead and talk about how much money would you make per month doing covered calls on Clover right now, and potentially when it reaches this price. So you can see why I'm not doing covered calls now. And then for shits and giggles, we'll do the price for when it reaches for Palantir. So we'll do those things, and that'll be very good. Okay, so then now before we do that, I want to go ahead and open up Clove here. I want to open up the daily chart, and actually I want to do the hourly. So as you can see here, guys, I was trying to find the top channel here. So okay, let's just let's just teach for a sec. Let me teach. So you can see here, this upper triangle in blue and this lower triangle in purple. There was a actually standard triangle here. And then we had a breakout. Okay. Then we had a descending triangle. Then we had a breakout. Now we broke out. We started getting a downward channel. So then we broke out of this channel. So then now I'm going to remove this, or actually I'm going to reorientate it so you can see how I'm doing it in real time. I'm going to change it, and this time I'm going to formulate the bottoms here. Because if I do it this way, because it touches more, it's a bit more accurate. This way, I'm trying to determine which way is the, oh man, this is good. Okay, so this is slope is 0. Slope, do I really have to, are you really going to make me calculate the slope? I'm so freaking tired, guys, right now. Which is the one with the, I want to see which was the one that has the less bullish slope. Hold on. There it is. So this is actually more bullish. So we're going to do this. And this touches more. This is less bullish. I'd rather do the less bullish one. Okay. So then now here's this. Now, of course, we can draw another triangle, go like this, but I'm just going to go like this for now. And then now this, I'm going to push here. I'm going to go like this. So you see now how now, and again, it's hard to see. I've been doing this for a long time. So see how now you can see there's a channel here. See that channel now? Are you seeing the channel, guys? So you see how now I just converted it to this channel. So then now we go to the daily. Now we can see kind of where we're at. Here's earnings. Estimates is negative. I think it's going to be profitable because last Q2 was here, and that's when it exploded. It was positive gap. Okay. Yep, you see the channel, right? Excellent. And so now we're just going to trade between these channels here. Right? We're going to go, I think we're going to go like this. Again, it could be that we don't go down here, but again, this is kind of what I'm thinking. Until we get a breakout, which is right when it cross-sected here. Now, the only thing I want to add is what's interesting is, and this is kind of the interesting here part, okay, is, so here's the thing, okay, I'm going to just leave it off with this, and then we're going to take a little break. I'm going to go get some water. The problem is this can turn bullish fast. Why? Because the casino is turned back on to chamath. And with chamath, with his friends, David Sachs, White House, all this is just, things can go really fast. And things can explode rapidly. Like we're talking like, you know, we're talking like pop, 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 like we're talking like this, like, right, or like that, right? So things can go really fast. Okay. So let me take a break, so we can go to do this covered calls, cash secured puts. But first, let me just kind of clean up this crap here and remove all these tabs. Okay, this is important. We're going to talk about this. Okay, we're going to remove this. Now you understand why I can't show that in the future, because that's how I'm going to do my covered calls, and it's my edge, right? Okay. Okay. So then now, give me a moment, and I'm going to take a little quick intersession break. Okay, I'm going to go get some water.
Albert Allen's got the secrets in his hand. Retail heroes taking over this land. Trading stocks with a master plan. Fortunes rising on the Clover brand. Numbers rolling, deals never stop. Bulls are charging, markets gonna pop. Albert's wisdom higher than the top. With Clover Health, we'll hit the jackpot. Fortune calls, Albert leads the way. like a song. Investing right, never going wrong. Fortune calls, I believe the way. Retail winners here to seize the day. Clovers have dollars gone astray.
All right, guys, we're back. All right, so I just needed some water. As I was drinking water, I was looking at the computer screen, and I wasn't expecting a lot of people to be here right now, but we got about 517 people watching, 54 from YouTube, and about 463 on X. That's pretty impressive, guys. And that's not even including whoever watched on LinkedIn. So that's pretty cool. Okay, so now that we went ahead and did this, let's go ahead now and talk about covered calls and cash secured puts. So now you can see the technicals. Again, I update them in real time so you guys can see. We're not messing around with all this, and it's very simple. We're just using lines and sticks, guys. This is caveman stuff, and you can see how we both understand the technicals and the fundamental analysis using intrinsic value and crazy math, right? So you can see the platform literally is all encompassing. It's a one-stop shop, right? Yeah. We're still here. Okay, so now, let's go ahead and do covered calls for Clover, and let's just see. Let's see what the 30-day. Let's just say I just want to do one covered call, and I just want to do it. I just want to do it for 1 month out. Here's the caveat. We're going to assume, so watch this. Intrinsic value graph. Just going to pull up some random intrinsic value. Okay, this is a good one. In fact, honestly, ours is really good on the course. But I'm just too lazy to pull it out. Ours is way better than this, but this is pretty good for it to be where it's at. So honestly, I am going to I'm just gonna stick this here, and I'm gonna pin this on the channel. So yeah, I'll get to it later. Okay. So I just posted something in the Clover DD channel. All right. So this is intrinsic value. We calculate intrinsic value utilizing this. We went ahead and showed you Carvana. Once it has 3 out of the 3 in 2023, stock exploded. We showed you Palantir. It had 3 out of the 3 in 2023, stock exploded. We showed you Tesla using our software. 2020 is when it had all 3 out of 3 and the stock exploded. We showed you AMD. In 2019, they had 3 out of 3. The stock exploded in 2019. And now you have Clover, which has 2 out of the 3. The third one's coming either this year or next year, and the stock will explode. So you can see everything's backed by math, right? So you do the intrinsic value, and then let's assume the Clover's intrinsic value is not $3.50. But let's assume it is. And right now, let's assume that I don't care. I want to sell Clover right now. Let's assume that. I want to sell Clover right now. Okay? How much money can I make per month doing that right now? And so let's do that, and then we'll show you. So I go ahead and do this, and then the problem is you need the data. You need to see, is it worth $350? Our institution selling? You get it? So let's go ahead and go 350, and then we sell the call, and we do it here. And right now, I have to see how many contracts I want to sell. Let's do 3,300. Okay. So every single month right now, I can make $79,000. As of right now, around, let's say 30 to 40 to $80,000 pretty much I can make every single month doing covered calls and cash secured puts. Let's say all of a sudden I go in and then I decided to do a cash secured put. I would just have to be able to find an opportunity where I would do, let's say, a cash secured put, let's say here, and then this one make me $70,000. So let's say, for example, I do a covered call. I sell at $350. And I'm like, you know what? I want to buy at $3. So I do the covered call. I end up selling at $3.50. Then I'm like, okay, fine. I sold out. I have all this cash. What do I do with the cash? I'm going to go party. No, don't do that. I'm going to go ahead and I'm going to do a cash secured put at 21 cents. That'll make me $69,000. So as of right now, I'm going to make $69K to $80K per month. So that's pretty good money. That's about $840,000, right? Now, again, I don't want to do that. Let me explain to you. Now I'm going to go ahead and do the same thing for Oscar. And now, by the way, hold on. So, or I can do, it depends. You decide. How do you want to get paid by the weekly? You want to get paid by the monthly? If you want to do weekly, you could every 9 days. So let's say, technically that's more than, because it's including the weekend too. So this is, since we're almost, let's call this weekly. So I can do this weekly. And if I do weekly, I actually get paid more. I don't know why it works that way sometimes. So if I do weekly, let's do for Clover. And I can make right now on the weekly, I can make 29.5K. So I can make $29,700 expected profits. So $29,700 per week times 4, I can make $118,000 right now this month. I can make it right now if I want. I can squeeze that. But do I want to do that? No, because I've done the intrinsic value, right? I know that I can make more, right? And the question is, when is more enough? Yeah, but if you understand the value, you're like, you'll be stupid to do it now, okay? So now let's do the same thing for Oscar. So let's do sell a covered call and make sure you sell, don't hit buy, right? And then you want to go in and let's do in a month. And again, we'll do the same thing. We're going to assume that the intrinsic value is right now. It's just I'm ready to do. I don't see any more value at this price. I want to go make my money. So if I do that, and you could even do it even here or here. It depends. You can even get more if you want, but let's just do this one for now. So if we do this, we do 3300. Again, I could do this for Clover because, I got 330,000 shares, right? I can do that right now. But I'm just telling you, if we just change the price, how much would I make? So if it just goes to $14, now every month I can make $560,000. Right? You see this? I can make down here too. 560K, right? So I can make $560,000 per month. So if we do the math, instead of making $840,000 per year now, I can make $6.7 million per year. Okay? So that's why I'm trading $800,000 for $6.7 million every year. That's stupid. I want the $6 million. Okay. But we could do weekly. So we could do this since this week is over. We could do weekly. And if we do weekly, it's even better. If we do weekly right now, the weekly is like sexy. The weekly, I can make $263,000. Okay. In 9 days. So next week, if I sell this contract, right? And then you have this week, and this week, right? We could call it like that. I can make $263,000 every week. So now let's do the calculation how much I would make per month. $263,858.58. So this is the weekly multiplied by 4. Now I'm making 100. Now I'm making what? I'm making $1 million per month. I'm making $1 million per month. And I multiplied that by 12. And now I'm making $12.6 million per year. You see, now you know why I don't want to do cover calls and cash secured puts? You see why I don't want that? Why? Because I'm trading $800,000 a year, which I can make as a doctor for $12.6 million. I'd rather the $12.6 million. Yes, this is selling covered calls, and then you could do cash secured puts. We're going to be talking about this heavily. And this is why when I tell you, I'm not going to be showing you the institutional graphs that we have that shows you the mathematical modeling, because I want that edge. I want to make $1 million plus. I want to make $4 or $5 million a month, right? And I can't show that online anymore. So by the time, if you want access to it, you're going to have to pay 20, 30K to get access to our lifetime access, which is why I'm telling you, we're using real numbers here. The people that join lifetime access, you're going to get wealthy. You're going to be surrounded by wealth. You hang out with losers. You hang out with 3 losers. You're going to be the 3rd loser. You hang out with 3 winners. Technically, we have more than 3 winners. We have a lot of people on our platform. You're going to be the 4th winner. Our users have an exceeding net worth of $45 million. $45 million. Right? Again, DD Music. I'm not going to tell you whether you should hold or buy a stock. I am not a financial advisor. I'm not any of those people. Think of me as someone from the streets. I used to be from the streets. Right? Started from the bottom, now we're here, right? But the point is, I show you this so you can be the captain of your own ship. Right? We are an educational platform. All we do is teach. And you are the receiving end of that. You use the knowledge that you had before, that God gave you, and you make the decision. Right? Right? This is trying to empower you. Okay, so now that you realize that every week we can make $260K, which means that every month you can make $1 million, and this is off of just $14. Now you're gonna look at me and you're gonna say, Al, you're crazy. If the intrinsic value is showing me that Clover is worth $50, $60, $70, $80, then I will not do covered calls at $14. Why? Because I'm waiting for the big boy. I'm waiting for the big dog. Okay? And my other portfolio, we've been doing this for Palantir, and we've been just milking the shit out of it. And for folks that don't know, we called Palantir at $6.50. Okay? And you can find the video and find the screenshots for that. Okay? So let's assume right now, right? And we could drop 1.5 right now on this, but we won't. But we could do trade options right now. And now I'm going to show you, assuming that I want to do it now, the covered call for Palantir. So now I want you to look at it. So this is just 2 days. Let's do 30 days. So 30 days, I want to do a covered call right now. And we'll do it for the same contracts we have for Clover. Every month for a 30-day contract, I can make $3.6 million. Right? So you see how we went from $70,000 per month to $3.6 million per month? So how much money now am I going to make with I got to copy the number. 3.6 million. How much money we're going to make? 3,646,358.58. Multiplied by 12. Now I'm making $43 million per year. You understand what I'm saying? 43 million per year. But hold on, there's more. Okay? Now, instead of doing 30 days, let me just do weekly. So let's do the same one with August. So now I'm going to do the same one, and now I can make 1.3 million per week. So if I make 1.3 million per week, I have to multiply by 4, right? For 4 weeks. That means I can get paid weekly, and then I make 5.5 million per month. So per month now, I make 5.5 million. You multiply that by 12, now I'm making $66 million. So you see the difference now? Why I'm not doing covered calls right now? I don't want to make $800,000 a year. I don't want to sell for scraps. I'm going for the 66 million. And I've already done this before. I'm going for that. Okay? So are you seeing the power of this? So now let's go ahead and let me show you what I'm going to do next after this. And the only way to know is to utilize the software. Okay? And you've already seen it. We have a public portfolio to prove. We're in the 7-figure range, and we also have the 8-figure portfolio, right? This system works. I'm trying to break you out of the matrix. The data is expensive. I can't give it away for free. It's expensive. Okay. It's either you join, break out of the matrix, or remain poor for the rest of your life. You choose. Do you want to work for the top or do you want to be at the top? So then now, if we're making 66 million, you multiplied that, and let's say 40% goes to taxes, so you only get to keep 39 million, right? And of course, we can buy jets and whatnot because this checks out as income. You can buy a jet, and that'll offset the Gulfstream, right? You can do those things, right? Yes, those are close to the stock. It's less likely they get called away. You still may exactly. You can still move up. But what did I say in the beginning? I said if we're saying that this is above intrinsic value, you want to hit sell right now, this is a way to do it. And all you could do is just trace it. But you could still go out of the money and you could still make bank. Exactly, JW. Exactly. Okay. So then now, after taxes, you'll have 39 million. So what am I going to do? And what I'm doing this right now, I'm buying $400,000 to $500,000 properties. So that means with this strategy, I'll be able to get 99 properties in a year. I multiplied that, and let's say there's a recession every 7 to 15 years. In 10 years, I'll have 997 properties. I will end up moving up, like my father-in-law. I'll end up moving up to commercial properties where I can just concentrate $20 million in one building and then be able to do it like that. But I'll just, for the purposes of education, we'll do this. We have 997 properties. Each property gives me, because it's a single family home, $1,800 a month, and that's on the low end. That's that's per month. Now I make $1.7 million per month in rent money, and that's per month. 1.7 million per month on rent money. So now from real estate, I'm making $21 million per year, and this is real money. This is legitimized money. Wall Street is not legitimized money, right? Because if there's a recession and it can affect it, right? So then now let's do the math. I have 997 properties. 997. Okay. And there's a recession. Stocks go down. All stocks go to the trash gutter. Okay. What am I going to do? Over time, my properties are going to get more expensive. But let's say they don't. They stay the same price, which obviously they're not. But assuming they will, over the past 10 years, I've accumulated how much? $398 million of property. Okay. So why are you using 330 shares? Because I have, it's hard to see because the comments say, because I have 330 shares for Clover. Okay. And you can use this for 20,000 shares, 30,000 shares. You can make a shit ton for that too. But I'm just giving you this. And all you got to do, because each contract is worth 100, you just take 330,000 divided by 100, use 300, you get 333. That's a very good question. Excellent question. Very good question. Okay. So then now let's go back. So now if you look at the math, I have 997 properties. There's a recession. Each property is worth 400,000. Obviously it's going to be worth more because properties accrue up with inflation. I'm going to have $398 million of properties. Okay. I go ahead now and I do a HELOC loan. I pull money out. Why am I pulling money out of my properties? Because the interest rates are going to be low. Why are the interest rates low? Because in 7 to 10 years from now, you're going to get a recession. You're going to get a recession. And recessions, they drop interest rates. So then I'm going to pull out 70%. That means I pull out $279 million. Is this taxable? No, it's not, because it's debt. I got a HELOC mortgage on it. Rich dad, poor dad, right? The only positive thing he said, right? You do not get taxed on your debt. I don't have to sell the properties because guess what? I'm still making $1.7 million per month from the renters. Okay. Multiply by 20% for vacancy, let's say, right? Let's take 20% off of that, vacancies. Okay. So now I'm pulling 279 million. So what am I going to do with that 279 million? I'm going to buy stocks because we're in a recession. And then I'll be able to, we'll beat humble. I'm going to do 2.5. I can 2.5x my money. So now I take the 279 million and now it turns into 697 million. Okay. So $697 million is right there. Right. And then I have $350 million in properties. You see the math? You see how the math tracks out? Now, if you're basically saying, oh, I don't believe this. This is bullshit. I don't know, man. This sounds too good to be true. I don't know, man. I just, again, I'm doing it right now, number one. And number two, you tell me, how can someone go from homelessness to showing you a public portfolio of $1 million? And if you still think, oh, I don't know, then my friend, I pat you on the back and I wish you farewell on your 9-to-5 journey. And thank you for making people like us rich. God bless you and God bless America. For the people out there that want a way out, there is a pathway out for you. We have a platform. You want to break out of the matrix, or do you want to be poor for the rest of your life? You decide. Peace out. God bless you all.